Good night, everyone. I hope you are all having a wonderful week so far. I'm just updating everyone with two pairs. In this video, I'm going to go over Eurgbp and Gbpaud. So I have biases for both pairs going towards the upside right now, and I'm going to first break down the Eurgbp from my top-down analysis. Keep this video short and sweet. So here we go. On Eurgbp, we left off last week by explaining that price was pretty much going to go into a down market for the remainder of the week, in which it did. If we look at October 1st, it kind of shifted momentum towards the downside, and I pretty much said that I would wait for a reaction if this low was to be broken, and right now price is currently reacting from that zone. So at this point, when you look into the larger time frame, what you see waves A to B, B to C, C to D was a completion, and then it kind of went on a retest, but a very deep pullback to the point where, yes, now it seems like a pretty solid point to re-enter the market and take it up to most recent highs. I would only go up to September highs, and that's as far as I would go, although I do see the target potentially going as high as, could even go farther and go as high for another 20 pips beyond that. So I do suspect price to go up farther, and then if price does break those highs of 0.87180, we should see it climb much further for about another 130 plus pips. So that's my long-term approach, but that's a very long-term approach because I'm no longer a long-term swing trade holder. I've been refining my day trading. I've taken several losses, but that's a part of the plan. I'm sure if you guys have been following up with me from my first video on this past few months, I did explain to everyone that I would be transitioning to day trading. So this is exactly what I'm working with, and losses are a part of the game, unfortunately. So some of these analysis just take with as reference only for right now. As I refine my approach, I will be taking some losses, but that's why I have if-then scenarios. I do have my bias and I do have my reasons, and this is all just practice until I'm consistently profitable as a day trader. So like I said, a lot of what I'm saying is valid, but again, there may be some times when you might have to observe and analyze it yourself because I'm still pretty fresh with day trading. But let me continue with everything. So for my top-down approach, I did get a current test at the C point, and if I do look into the minor waves, I do see an A to B, B to C, C to D, completion, pullback, testing the 0.618 of the larger wave, and it did fail. So you kind of just got to wait for a strong reaction. The reason why I got into this trade is because I did say that, I figure at 0.856, price is going to decline at that point and go down as low as the most recent lows, which we're seeing right here around 0.8527. Price actually did react off of the 0.618 Fibonacci zone very strongly and had a couple very bullish 4 hours. This was back at the end of September. Then the market rolled over, and started to retest that area of support. So this is a key level area of support right here. That's why I did take the buy off of the zone, even though it does look very bearish. And another thing is the bears could just be finishing their run. So what may actually be happening at the moment is the bears got into a good execution trade. That was the signal right there. That 4-hour time frame brought price down. Brought price down about 60 plus pips and to current support. So in Eurgbp, that run up, we did catch a very, very bullish trade last week, and it got exhausted, and buyers had to take profits, and sellers came in and Now it looks like they're taking profit because the overall bias is still bullish. Now it's only bullish for a very short period of time, and once we do take it up to the most recent highs around 0.864, then we're going to look for a reaction, probably a formation of a candlestick or some sort of momentum drive push towards the upside to signal a continuation. I'm no longer really looking at these highs, but it would be good to see a drive at least 30 pips above to break those highs. That would be a lot stronger of a signal. But I'm just simply waiting for the most recent highs to be broken for continuation of this trend towards the upside. So that's Eurgbp to sum it up in a nutshell. Just kind of got to wait. If I do have my if then scenario, if it does break these lows, we are suspecting, looking for a fall down towards the first level, about 22 pips, and breaking that, pretty much driving it down farther. We look at the daily chart, and the first area of that I'd be looking for it to go down would be another 30 pips. At that point, I would be looking for a reaction from that zone, looking for a bullish reaction. If I don't see it, then pretty much price is going to break those lows on the daily, and we're going to look into weekly territory where price will potentially fall at that point another 128 pips to weekly lows or weekly time frame lows, be 2-year lows, and just in time for this November. So last time we seen those lows was around November, early December 2019. So 2-year lows are in the midst of happening. But I don't believe that will happen because my bias is still bullish for at least another, see, from the highest point. Yeah, pretty much once these lows get broken around 0.8497, then my bias will be switched to the bearish side. I will no longer be bullish because that means that on the 28th of September, that bullish momentum failed, and that's going to signal a lot of bears to the market take the price down and start the new wave of down movement. Like I said, hopefully down towards 2-year lows and below. And I will get into that as we proceed. Let's get into the next trade. I have a Gbp AUD. I did not signal an entry yet because I'm actually still waiting. I'm waiting for a price to break these recent highs at about 1.87277. Once price does break these highs, that's when I'll be getting into the market with stops as low as 1.86040. But judging by the wave that's currently happening, I could potentially have stops as low as 1.86522, and that would be about an 80 pip stop loss. So if I were to put a trade in right now, I put a buy stop right here, and I put a stop loss about 80 pips below. But I'll do about 100 just to stay on the safe side. No more than that. So about 1.86339 is where I put my stop loss. Let's put it there. I believe that's right. No, that's too high. And that will be a 100 pip stop loss. And I mean, I do believe that this is a very solid trade. And I'll take it up. My TP1 will be at 1.88585. But ultimately, we'd be going for, let's clear this chart up a little bit. Looks like right there, 1.88755. That's a solid 126 pips away. So that will be my first target. And of course, I'll probably take profit along the way. So I'll probably take some trades off once it does go up to about 1.882. Looking at the intraday time frame, just a moment here. So the target is up here, and on our path towards that, we see a very there's a little area of resistance right above. I do see it going at least up to 1.88200 before any type of rejection or retest before continuing it on its way up towards 1.88755. That will be my first area of profit at that point. Then I'll probably just wait for some sort of reactions or carry the trade towards higher highs. I do see this high being broken at some point if this is to continue on towards upside. And from there, we can definitely see a clear run all the way up about another 160 pips towards 1.91224. And that will conclude the bull run just for right now. And further above, we have 1.91548, which would, if the bull run succeeds to that point, we will take it farther and look at the daily, weekly, and above. And as we can see on the weekly, it is a good amount of pips away. And that's something that we will track along the way as well. Now, if it does go against me, there's a couple things that I will do, and I have my stop loss in place in case that does happen. So if it does go against me, the bias is going to shift towards the downside. I'm already looking at 400 pips from the peak high since August. We can see it right here. Price goes back down there. It signaled an uptrend recently, and that uptrend was interrupted by a down wave, and now we are testing the lows of that uptrend. So if price does continue any lower than where it's at right now, that's about 335 pips from that high, but from the high of this trend, that's about 478 pips. So basically, it's a resumption back into the downtrend if price does hit that low. I don't really see it hitting that low. I don't really see a real downtrend happening until at least lows of 1.8525 is broken, and then we could see some falls. First drop will be towards 1.82870, and then there's a really steep fall after that towards 1.78295, which is about 400 pips. So there's a 400 pip target towards the downside. That's exceeding 250 pip target, so that's a total of about 600 pips to the downside, a little bit over 600 pips to the downside if the market does fold over, change directional bias, and continue its downtrend. And in that case, I will update you all with another video. As I said, I'm still working on the day trading, so it might be a little rusty these next several weeks, but I will pick up some pace and consistency over time. Hope you guys took a lot of pointers from this video, and I'll follow up with you all tomorrow or the next day. We'll see what happens.